Good morning, everybody. My name is Todd Lawrence, and I run corporate finance and anything pretty much Bitcoin ATM related for secure digital markets. Thank you, everybody, for joining us today. We're excited about sharing with you some of our ideas about how to unlock some of the value inside of your current crypto assets. Secure digital markets is one of Canada's and one of the world's leading over-the-counter digital asset trading desks. We pride ourselves on high-touch customer service. So if you ever want to deal with one of the people at Secure Digital Markets, we'll always pick up the phone and speak with you directly. If you want to chat, that's obviously well too. And also on our technical capabilities that have really advanced over the last little while with our new API. My background is in investment banking with Royal Bank of Canada, as well as Citigroup in Toronto and Australia. And then I started a company called Just Cash, which was a Bitcoin ATM software provider that we grew to about 5,000 BTMs in the US, and then sold that to private equity in 2022. With that, I want to introduce a colleague of mine, James Godfrey, who has a tremendous background in traditional finance and has brought on to the SDM platform to help out with their lending desk.
Thanks, Todd. So yeah, as you said, I'm James Godfrey, and I'm very TradFi, but I'm also very crypto. Took my crypto tablets in 2016, built an exchange in London and joined SDM on the management team about 5 years ago now. The last 3 of which I've lived in Canada. Before that, I built Mizuho, which was the largest credit trading desk in Europe. And before that, I was all the way through the noughties. I was head of credit trading for Nomura, the Japanese brokers. Right, all that gives me an interesting perspective on crypto, because I don't look at it the same as maybe you do, or maybe more like the way that Todd does. But we look at it in a more traditional financial markets, from a more traditional financial markets viewpoint. Right. So, should we get started?
Yeah, for sure. So, just a little bit of sort of what happened over the last couple of years. Obviously, we had a big bull market in 21 through 2022, and there were a number of different sort of major events that happened throughout that. Obviously, some of the different bankruptcies and just different approaches to lending money into the crypto space. A number of the different sort of practices that people sort of abided by or followed would not have been the ones that sort of James or myself would have been allowed even to deploy at the traditional financial institutions. People sort of went after these with a little bit of a higher risk appetite to chase some larger rewards and new markets. But unfortunately, as we've sort of seen in the past, that does lead to and can lead to some trouble, as we've sort of seen some of that unraveling happen. Just some of the numbers in general as far as 2022, with these loans that were outstanding, and a lot of them uncollateralized or collateralized, but 3+ million customers impacted, $10+ billion in collateral loss, and 5,000 plus employees that lost their jobs and had to find something else to do. So what SDM has done really well over the last 3 years and stuff has been able to insulate itself from a lot of these disruptions inside of the market and some of these black swan events by really trying to employ traditional financial practices and safeguards to the way that we go out and deploy lending opportunities, and just how we look at clients just in general.
I mean, Todd, you know that we have bored people senseless inside the firm, banging on about counterparty risk. And a lot of the people who were new to this industry and new to any industry didn't understand the pitfalls and couldn't see the pitfalls as well as we could. So look, what we're trying to say is we're very proud of what we've done to get here, and proud of what we've built, and we're very pleased to be sharing it with you. Put it that way. Right?
Yeah, and I think it's just a bit of a compromise with cryptocurrency. If you're buying Bitcoin and you're sending money into the ether, if you will, right? Like there's a lot of trust that goes into that goes into that, as far as, not getting rug pulled or so on and so forth. And we saw a lot of that trust spill into traditional business operations and stuff, and that's great. However, you still need to sort of employ the traditional safeguards. So if we kind of take a look at how this sort of trickled down throughout the market from a Bitcoin ATM perspective, for example, right? The crypto operators now face a number of different challenges, right? They've got revenue that's labeled as crypto that they get worried about from a banking perspective. It's difficult to access working capital. There's a significant number of ATMs that were shut down throughout the past couple of years because people expanded into markets and paid exorbitant rents, right? So those fixed monthly costs really ate into the ability for these companies to operate properly, right? So one of the prime examples is CoinCloud. They racked up like almost $500 million in liabilities, right? And because Genesis didn't take the extra time or want to really collateralize the full loan because that was more difficult and wanted to get the business, they found themselves in an obviously very precarious situation after that company went south.
Also, Todd, I mean, a lot of the Bitcoin ATMs were gearing up just as the market was hitting the highs.
Exactly. Yeah.
And when it pulled back, because of the embedded business model for all Bitcoin ATMs, they were long on the way down. So they were basically on a train, and there was no way of getting off it. What I would say to people is, if you're in that position and you have a long in Bitcoin, which you don't necessarily want to run or need to run, then we can show you efficient ways of hedging that out. Just to be clear, we've got a large OTC desk in Canada. We've got a large lending desk in Canada. We've also got a derivatives desk out of New York, and we just bought an FCA fund manager in London. Okay, so if any of those things, whether it's funds as a service or whether you need a derivatives hedging strategy, we can bring that to you, and we can bring that to you on a bespoke basis.
Yeah, basically, I mean, we love this market, and we just want to try to deploy some more tactics to be able to help grow the business. So just a bit of some discussion. James wanted to take us a little bit through the sort of where we're sitting with some of the state of the crypto lending in this market right now.
Yeah, I mean, the market is changing, and don't anyone that thinks that the ETFs all they do is make the price go up is fooling themselves a little bit. This market has changed beyond belief, and we're as far as lending is concerned, we're running towards a marketplace where we will be able to repo Bitcoin, and you will have an overnight repo. But at the moment, I liken this market to credit default swaps back in about 1998, when everyone had a different lending contract, or everyone had a different CDS contract. Until we get that, and we get a centralized, not decentralized, a centralized platform for exchanging risk on and for placing risk, then we're going to continue to have a very disjointed market, which is what we have at the moment. And what we've tried to develop is a very elegant solution. How can I explain this? Ultimately, if we choose to run our business incorrectly, then it destroys our business. So we have to make sure it is as secure an offering as we can possibly make it, and subsequently, it's as secure an offering for you as we can possibly make it. If we get that wrong, then we lose our business. And we've spent, some people have been here 7 years now. I've been here 5, as I said. And we're not, I don't particularly want to waste 5 years of my life by doing this wrong. So we ended up getting for you the best possible lending opportunity that we can.
Yeah, so it's been, as James said, something that we've developed as a team and a company here over the past couple of years. But taking those sort of extra steps to make sure that we have our right checks and balances in place has been, one of the things that's allowed us to, continually grow when a lot of companies, either went out of business or, consistently lost business and stuff.
We could have done an awful lot more lending than we actually have. And we could have done it on a much more industrial scale by using lots of different lenders on our back end. And we sit down and go through the balance sheet with a fine tooth comb of everyone that we use to make sure that we are absolutely happy with what's going on. And if there's anything that doesn't get through, then we just walk away and we find somebody else.
And then just from the market and the rates perspective and stuff, the amount of money that's actually outstanding and being borrowed in the crypto space is pretty significant. Rates are obviously much higher than they were before. We're not going back to free money anytime sooner, probably in our lifetimes. But we're seeing working capital facilities 12-15% plus. And what James and I have come up with that we think is a way to be able to bring those rates down a little bit by utilizing some of the assets that you have on your balance sheet that traditional financial players or other partners might not recognize or give you the full credit for.
I mean, they're being 12 to 14%. You're being charged the same as seed capital on a construction deal. With this is a completely different animal. This is much more like a traditional financial market instrument, and it's a much more like a traditional financial markets deal. The funny thing is that one of the main lenders we use, 80% of what they do is fixed term repos in equities, and 20%, I think it's 12% of what they do is against crypto. So we are handing out a much more elegant solution, we think, that is currently being handed out in the street.
So just following on that, James, maybe you want to just detail a little bit more about how we're specifically offering just customer and clients' ability to utilize some of the BTC that they have on their balance sheets?
Yeah, 100%. So currently we're offering out 12, 18 and 24-month terms. 12-month by far being the most popular. So what that means is that you enter into a loan agreement in the same way as you would against your house. You enter into it against your crypto. So if you send me $1 million worth of Bitcoin, I send you $650,000 worth of cash against that. Your margin calls are at 70%. Okay, margin calls are interesting because it has to trade below that margin for 3 consecutive days, and you then get 3 working days to decide what you can do. And you can either top up some collateral, you can give back some of the cash, or if Bitcoin is completely collapsed, you can just walk away and keep the cash because it is a non-recourse loan. Now, typically what we're charging for these is something like a 1.5% arrangement fee and interest paid quarterly in arrears, and the interest is about 7%. So that's coming out at about 8.5% for a 12-month loan currently. It is a fixed term repo. It's a very elegant solution. There's no messing about. There's no auto liquidations. There's nothing. You're not going to get up in the morning and find out we've sold you crypto. Okay, that's not how it works. And there's no 15% balloon payments. And if we lose money, we'll come back and get you. There's none of that at all. It is a non-recourse loan. It's done in a traditional financial markets way. This structure was initially set up by the company we know well. It was the family office that we know well, and it was to lend against. So, say you were a Nasdaq CEO and you had $20 million worth of equity, and you didn't want to sell it, but your wife wanted a new house, then they would lend against it, and that's exactly what this is. And that's, to be honest, what most people use it for. I think actually almost everyone that we've lent money to this year has bought property with it. So that's telling me something. I'm not quite sure what it is, but that's telling me something. And also with the margin calls being so TradFi, having to go below the market level for 3 consecutive days, it's much more grown up. There's no panicking. There's no phone calls at 3 o'clock in the morning. We need more collateral, all that sort of thing.
Yeah, no, that's great. It's whether it's
just to point out, we do have coming online in about 6 weeks' time short-term loans, so they can be from overnight to 12 months, anything under 12 months basically. So if you want to borrow for a month or 2 months or 3 months, they're going to be coming out at about 11%. Okay, so not as cheap, but you do have the ability to pay them down and have as short a maturity as you want. We do get offered. The reason we put this in place, and we apologise that it's slightly more expensive, is for people who just want money for a month or 2 months and don't want to tie their collateral up for 12 months.
Yeah, no, it's great. That's a nice add to that. Allows flexibility, obviously, with the market moving up and down pretty significantly over the last couple of months. Just adding the extra flexibility, in my opinion, is worth it.
I find it's interesting as people start to do different things with their crypto. Although almost everyone this year has bought property. Last year we had somebody borrowing money to set up an insurance company. In the past, we've had people buying jets and yachts. So it really can be for anything. It doesn't matter. It certainly doesn't matter to us what you do with your money. But it's interesting to see people. Most people are either buying property or making some sort of investment with it. There are opportunities. We all know that with an all-in price for 12 months at 8.5%, there are opportunities out there that are paying considerably more than that. One that we looked at and that a client did was actually a trade finance fund, where the trade finance was contained within Amazon, so you were taking legal ownership of Amazon inventory. There are all sorts of ideas, and it was basically just a carry trade, and they were making reasonable money on it.
Just following us a quick little bit where we try to sort of position ourselves for this. Like as James has mentioned, it's been a lot of hard work keeping ourselves up and running and staying out of some of the danger zones and stuff. So really just counterparty risk low. The parties we deal with are back 1-to-1, not levered up. So we feel very confident about those. And then as far as just the decentralization and stuff, we try to keep this very bespoke to our specific customers and really just try to make sure that we're partnering up with people that can make sure that these loans work for both parties. So as far as just the flow, if you will, of the pricing.
Yeah, do you want me to go through that, Todd?
Yeah.
I mean, if you wanted to do a loan, obviously you have to fully onboard full KYC, full AML with SDM Lending. Onboarding for as long as it's reasonably, as long as you're not a Nigerian prince, normally takes 2 to 5 days. It's not difficult. There are 2 ways of doing it. There's a simple way and the not quite simple way. The simple way is for smaller transactions. So let's say $1 million and under, $1 million being our average ticket size. The minimum size, by the way, if you want to ask, is a loan of $250,000. So for smaller tickets, what we tend to do is we tend to do a 3-day pricing period, and then you transfer the coins, and we immediately price the loan and transfer the entire amount across. For a larger loan, what we tend to do is transfer the coins at the beginning of the arrangement period, do a 3-day pricing period, price the loan, and then send the second half of it across. We can do either for any sort of amounts. We just find that one works best for the lower amounts and one works best for the higher amounts. What it means is that from you walking in and saying, I want to do a loan, I want to go through KYC, if everything goes completely smoothly, then you can probably have money in your accounts in the 7 to 10 day area. Okay, and we can have it all set out. We like to not rush people. We like people to take the time to read our documents. We have master loan agreements, master pledge agreements, term sheets. Want to make sure that we get you absolutely happy and into a place where you know exactly what's going on at every eventuality. And trust me, if you don't ask the right questions, I'll answer them for you anyway, because we've been asked them a lot in the past. We've been doing this for 4 years.
Yeah.
We've certainly done more loans in the last 12 months than we did in the previous 3 years. And it is exploding now. I think we've got currently 5 loans on deck to go out in the next 3 weeks.
That's great. Excuse me. So that is how we can utilize some of the BTC that you might have to be able to finance some of these things. So following on to that, sort of some specific financing solutions for BTMs and other crypto businesses, if you will. Again, just a quick little case study of what happened before. CoinCloud and Genesis, $100 million of uncollateralized loan that did not go well for the customers or the creditors. Sort of the little comment at the bottom that we try to avoid, not good for the borrower and not good for the lender, and really just not good for the industry. I mean, it's great to see the ambition and such to be able to get these products out, but obviously that came and bit these guys in the rear end a little bit. So we've tried to learn from those things and again deploy the traditional financial practices to be able to provide some safer products for both parties. So as far as the actual crypto and the Bitcoin ATM business, having been in this space myself and run a Bitcoin ATM company before, what we've done is created sort of a proprietary credit facility that allows the BTM operators to borrow against the actual cash held inside of the vaults. I always found that when we had cash sitting in our BTMs and stuff, that nobody would take that seriously. It was just dead cash that wasn't to be able to be utilized. And what we're doing here is providing, that more traditional financial approach that says, the cash in those vaults is just as good as cash in any other vault, right? Your money is just as good as anybody else's money. And it's nonsense that, the traditional financial institutions and banks and stuff, won't allow BTM operators to be able to utilize what is really, cold hard cash and, a tier 1 asset. So what we've done is come up with a proprietary way to be able to allow BTM operators to borrow against this cash in their BTMs, right? That allows them to expand access for working capital. Maybe it's Friday and you've got, a big weekend of sales coming ahead and you need some more BTC for, the hot wallet. You want to keep your customers happy, or you just need some, new BTMs to go into the locations. This facility here allows you to take what's essentially dead cash sitting in those vaults and be able to utilize that in a much more efficient way. So some of the, just the highlights that we sort of highlighted a little bit earlier before, but there's sort of 3 primary use cases, right? You want to make sure that customers get their BTC in a reasonable amount of time. Customers get pretty irritated if they're waiting, more than 15 minutes, let alone 24 hours to be able to receive that cryptocurrency. And the operators will know that these times arise fairly often, especially during bull markets peaks. You need to increase the frequency of your vault pickups and, just the availability of the BTC in your hot wallet, because nothing's worse from a customer experience perspective than, going up to a BTM and trying to get some action when a price is going up and that machine being out of order. Additionally, that cash that's inside of those BTMs, you could also utilize to potentially expand your network. So if you're going to go and add a number of different BTMs to different locations, you need to be able to, buy the actual BTMs themselves, but you also need to have the float to be able to support the sales, right, that happen at these BTMs. So if you are looking at expanding locations, this is a way to reduce the capital intensity of those growth plans by utilizing, again, the cash that's considered dead right now in those BTMs to fund the float of some of these growth opportunities. So just from a selling perspective, why is this unique for SDM? Again, we're one of the largest digital asset desks in Canada and the US, and what that really provided us is, and we've got a pretty good BTM base already, and we know this market pretty well. Like I said, I spent a decade or so in traditional finance and investment banking, and then co-founded and started a BTM company. James, with his traditional finance and the lending space, we kind of cover all those different aspects and think we can really provide some customized solutions and hands-on service to everybody. It's really the only credit facility out there that allows people to borrow against this particular cash. It's elegant and a fairly simplistic way to be able to do so, but one that also utilizes armored carriers and some technological aspects in that there too. The OTC desk that we have through the API, we have different functions from auto buy to auto replacing your hot wallet or topping up your inventory without your finance manager having to sort of manage that on an hourly or daily basis, which frees up their time for a number of different other activities. It's not AI, but the idea is just to make the trading a little bit more seamless and a little bit less manual and something you need to watch all the time. And then further, just as far as the rates go, that all depends on the operation. We kind of assess that individually with the different clients, but it's one that we think that it's competitive. And again, it's really about trying to utilize this dead cash that's inside of those vaults for you to be able to expand your operations and run your business a little bit more efficiently.
I think one thing I always wanted to point out, Todd, was that two things actually. Firstly, that we don't just do Bitcoin. So we we can lend against selected top 50 coins, and we can certainly transact the top 50 coins quite happily. I'm not promising that the rates are going to be the same, but they are going to be fairly close. If you've got a few $1 million worth of Matic and you want to borrow against it, then please give us a call. The second thing is we've embraced quite an interesting piece of technology called a telephone, and we give out. So if anyone actually wants to get on the phone with us, we are happy to talk. We are true evangelists in what we're doing, and if we can help at all in any way, shape, or form, we'd be happy to do so. Right, now should we do the questions? What does it mean to eliminate counterparty risk from a loan transaction? We can't eliminate counterparty risk, but what we can do is we can minimize it. And the reason we minimize it is to deal with counterparties which are solid, which are properly funded, which are unlevered, and which have been around for more than 10 minutes. Our main lender has been around for over 20 years. They've got a $2.5 billion unlevered balance sheet. By unlevered means they have no external lines of credit, and as such, we have no external lines of credit. Okay, so during the global financial crisis, just to be totally clear, I was head of trading at Nomura. So I was running the credit trading in London, Hong Kong, Singapore, and Tokyo, and it was counterparty risk that kept me awake at night, not market risk. Market risk you can cope with, market risk you can hedge out. Counterparty risk is much, much more difficult. And when it comes, it's binary. So when Lehman's went down, when Bear Stearns went down, when Landesbank ISA went down, those were the scariest days, not when the markets had its biggest dips. And that's what people like me and Todd carry with us, and we will always carry with us, is the fear of those days, and that's why we try and make this as elegant and as streamlined a process as possible, and this is why we use the counterparties that we use. Who custodies my collateral? The collateral, if you're doing a term loan, the collateral will be custodied in Coinbase and will be transacted through Coinbase Pro, so it never goes outside the Coinbase ecosystem. It's Coinbase Cold Storage is a standalone entity and it is insured, I believe, but you'd have to ask me to check exactly what the amounts are that it's insured for. But yes, so it goes, your collateral, to be totally clear, your collateral will go from us to the family office, and the family office will custody it at Coinbase in cold storage. Is my collateral used in any future transactions? So what happens is the collateral is not rehypothecated, so it's not relent out. They're not high frequency trading it, because they have an open risk on your collateral risk that it's a non-recourse loan. You could walk away and keep the money. they have to have the ability to manage that risk. So they do have the ability and the need to be able to trade your collateral, but they are not trading it on a daily basis. They are not high frequency trading it. They are purely managing their position. I believe currently the family office that we use has a $2.5 billion balance sheet. They have about $1.75 billion out in loans, of which a couple of $100 million is crypto, and in total they have 400 line items. So what they do is they have both a macro and a micro view across their entire portfolio. So at the moment, I know that they are running fully long of Bitcoin. And if they think there's going to be a pullback, then they may sell some of it out. But as I say, Bitcoin is only one of only 400 line items that they run. Can you borrow crypto? Well, not from me. I'm sure you can borrow crypto. By that, I'm not quite sure what the question means. I think the question might mean, can I borrow USDT against it? We lend USD, but we deliver USDT. If you're saying, can you borrow Bitcoin? That is a separate question. We do have clients who wish to lend out their BTC. It's not something we've done as yet, but we do have the structure in place to do it. The paperwork would probably take me a week to 10 days to get together. But if somebody wanted to borrow crypto, then we could facilitate that sort of transaction. One thing we have done for people in the past is we've lent crypto against crypto, which is effectively, this is not tax advice, which is effectively a tax transaction whereby somebody can access their crypto but not pay capital gains tax on it. But as I say, I'm not a tax expert, and that is not tax advice. Along the tax advice, I'm not a tax expert. This is not tax advice, but most people, the advice they seem to get from their tax advisors is if they do a loan, that is not a tax event. So if you're borrowing fiat against your crypto, you're not triggering a tax event. But you will have to check with your own tax advisors to make sure of that, depending on where you're situated. Minimum and maximum loan amount. The minimum loan amount is $250,000 US. So that would be against about $375,000 worth of crypto, whatever that crypto would be. The maximum loan amount we've done this year is $10 million. That's not the maximum we've done in the past, and we don't like to do more than $25 million clips. So even if you wanted to do $100 million, we'd probably have to do it in $25 million clips. But that'll be a first world problem to have.
Yeah,
for sure.
Over to me, I guess. So how do I unlock the liquidity in these BTMs? The easiest way to do that is to just give me a call, to be honest. We'll make our contact details available. But having been in the space, I started Bitcoin ATM software in 2014, I guess it was. As the first person to speak about Bitcoin ATMs in America at the National ATM Council and ATMIA Association conferences, which I'm sure a lot of you have been to over these days. And it's really just to try to get to know a little bit about how you run your operations, right? There's been people that have started with one BTM and have grown up to thousands, right? And have grown, organically. And there are people that have raised significant capital and have come at this with a more of an institutional perspective. So we really like to try to get to know our clients and how their operations are working, where their pain points are, and to be able to, take a look at some of their vault cash cycles and, what their balance sheets look like for us to be able to identify which of the assets, primarily that cash in the BTMs, to be able to utilize that for working capital. And by going through that conversation with us, we can identify and outline a plan that will, allow you to be able to utilize that that cash inside of those BTMs and turn it from dead into live, if you will. Yes, you can also use the actual physical BTMs as collateral. We did see a little bit of this historically, where people, lent money out to the machines. What you'll find now, though, when you do that, is the rate that you'll get from like a loan value on the BTMs. It's not, you're not getting the value of 20,000 per BTM as it, was back in the heydays and stuff. What we've seen as lenders that are comfortable lending against the BTMs, they've taken a significant haircut as to the amount of value that they actually ascribe to those BTMs, because it is a bit of a process, obviously, to go through, selling those, collecting them, and trying to recoup those funds. And as James has highlighted a number of times on the call, it's really about that counterparty risk. And it's not just the paperwork, right? It's be able to make sure that we can actually, get the money back or complete that sort of transaction and stuff. And if we're able to do that and minimize our risk, what that really means is that we're able to offer, better pricing to the BTM operators out there, because, better managed risk is a better managed price. Onboarding process, very similar.
Oh, you do it. Onboarding process, the best place to open an account with SDM is at sdm.co, and you can go on there and submit all your documents. Please reach out to us as well if you're doing that, and we will obviously give you a bespoke service in the back end. But it is the same as opening a bank account or a broker dealer's, possibly a little bit more in depth. But you will pass through the same KYC AML process as you would if you were joining a regulated institution. Having said that, there's no reason why that shouldn't be done in 3 days.
How does API benefit the ATM operators? Well, one of the things that I found when we were running the BTM company was the pain in the butt and the resources that it took to actually manage the hot wallet and the float and your capital, whether it was on, at SDM or Coinbase or some other liquidity provider. It's basically a full-time job. So what we were able to develop over here is some automated, transaction orders through the API that, again, allow BTM operators to manage their flow capital, right? So if your hot wallet is, getting low, then the software is able to recognize that, make auto purchases through SDM software, which we have, incredibly tight liquidity and pricing, is able to manage that automatically. So your finance, your operations people can, work on other things during the day. And these API and our auto bots will, allow you to manage that float, obviously on set levels and checks that you've input before, to be able to top up that hot wallet or, move cash from A to B, which again, just makes it a lot easier and a lot less manual, freeing up people's time for other operations. Yes, it does. That's kind of what I was just speaking about a couple seconds ago. So that's the kind of the idea, right? And especially too over the weekends and stuff, right? Bitcoin's a 24-hour game. It's trading all the time. And as much as we all love to work all the time and have our phones in our hands all the day, it's always nice to unplug a little bit. So having these APIs inside of available and allowing you to utilize these and automate some of these functions according to these preset times and levels, just helps free up some more of that time and takes a little bit of the stress out of the 24-hour trading market.
I think we've probably bored these people enough now. But I will reiterate to everyone, we are really open, and if we can help you in any way, shape, or form to do with any of the things that we mentioned, then please reach out to us. We're obviously available on LinkedIn. I'm James at sdm.co, Todd at sdm.co as well, on email, and we'd be happy to jump on the phone with you, jump on the call with you, whatever time zone you're in, to see if we can help. Thank you very much for joining today. Really appreciate it. I hope this has been of some help or some use. And if you're not quite sure, then please reach out to us. I think that's about it. Thank you very much indeed. Have a great rest of your day.
Thank you.